Hello and welcome to BCR. Let's get your trading day started with the following financial news and market headlines.
At the midpoint of the U.S. session on Monday, the U.S. dollar index slightly declined to around 105.20. The strong market sentiment and the firm stance of the Federal Reserve on interest rate hikes limited the fall of the dollar. Any potential rebound of the dollar largely depends on major U.S. data releases this week, particularly the CPI for April, which is set to be released on Wednesday. Following a weak performance at the beginning of the month, the dollar rose above 105.00. A modest increase in U.S. Treasury yields and a cautious attitude among traders as they await the CPI data for April, due on Wednesday, supported this recovery. The dollar may further rise based on its recent rebound. As the dollar rebounds and ahead of the later release of the U.S. PPI and CPI this week, gold remains weak, prompting a retest of the $2,330 per troy ounce area. During Monday's early European trading session, gold prices continued to fall, approaching $2,350. However, escalating geopolitical tensions in the Middle East have driven safe haven flows, which are beneficial for gold. Hawkish remarks from the Federal Reserve and increasing speculation that the Fed may delay its easing plans have bolstered the dollar, weighing on gold priced in dollars. Nonetheless, signs of economic weakness and ongoing geopolitical tensions in the Middle East may provide short-term support for precious metals. On Monday, oil prices rose, but the outlook remains challenging. Due to concerns about the offensive in Rafah, the U.S. has temporarily halted the delivery of certain weapons to Israel, further escalating tensions in the Middle East, which has paradoxically not led to an increase in oil prices. At the same time, speculation is growing that OPEC Plus will not lift its voluntary production cuts at the upcoming June meeting. WTI crude oil prices traded around $78 per barrel during the Monday Asian session. Federal Reserve officials have indicated that interest rates may remain high for an extended period, which could affect economic growth in the U.S., the world's largest oil consumer, and reduce its oil demand.
We hope you enjoyed today's market outlook. If you have any questions or topics you'd like us to cover, feel free to leave a comment. Remember to join us tomorrow morning for the freshest news in the